Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Warning signs are flashing. This one in particular deals with the US consumer. You know how important the US consumer is, and this is something we should all be paying attention to. Let's go. Beginning with this, you're looking at the University of Michigan consumer sentiment, and it has fallen through the floor. This hasn't happened since the financial crisis and other parts of the cycle that we've been encountering. So it's coming at a time in which we're being told there's no official recession, there's no official crisis, but look at the data. Look at what it's telling us. And here is where we get into the warning signs. This is very unusual. What we are seeing here on this chart is the US consumer sentiment versus unemployment rate, a huge decoupling. By the way, if you look at the light colored line, that's the unemployment rate. It's inverted, okay, just to get make sure you're aware of that. And you see this chart goes back to 1950s up until now. And essentially these track each other, and it makes complete sense. What happens here? The consumer sentiment is down at the same time the unemployment rate is down, and then they reverse. Obvious, right? People don't have a job. Well, generally the consumer sentiment would be poor. But today, look at what's happening. We're watching the unemployment rate at levels that are just ridiculous. What is it, 3.6% in the US? But at the same time, consumer sentiment has fallen through the floor. So what does that tell us about what's happening today? This is something people should be paying attention to. Very worrisome to see decouplings, to see problems occurring at this level. Recession may not be here yet, but stagflation is. The baseline is stagflation, what we are experiencing now. So you have a baseline that is not very comfortable, stagflation, and then you have a balance of risk, which is the wrong way, a recession. So that's what I think people should be paying close attention to. The growth of the future, at least in the next few years, is minimal at best. And why is that? Because so much stimulus had been pumped in. Markets fell, economy fell. Okay, that was actually happening from prior 2019 and so on. But anyway, you had this period of extreme stimulus. And this in here is something that people need to wrap their heads around. You can't do that forever. Right now, it's the markets, it's the economy needing another boost, but not being able to get it. It's a junkie. You know what I mean? And that sort of thing, I think if we focus on the stimulus, we start to understand the cycle. And in those cycles, we learn what happens all throughout. And you can't avoid it. You can't avoid this information. It's in front of our very eyes. Hope that makes sense. Let me expand on that further. Metals haven't crashed this hard since the Great Recession. Prices for copper, tin, and other metals plummeted last week as recession fears grow. When you look at different commodities, in this case here, they're mentioning the metals. If you look at the demand, what is the demand for homes in the next year? What is the demand for any sort of consumer product, agricultural product, whatever it might be? If that starts to diminish, well then, we watch the prices of those things fall. And this big D, as I like to call it, deflation, is very real. In my personal opinion, I believe that there is a natural deflation that is happening because you pump so much money into the system, and it has a terrible effect on certain aspects. It boosts certain things up. So prices of your bread, which we'll talk about in a second, may start to go up. But at the same time, you could have individuals' wages in real terms start to come down. And then they can't buy more stuff. Because you got to understand, the middle class is actually the one that makes everything move. They don't have necessarily, individually a lot of wealth, but they're the ones that make the machines go round and round. If they don't have jobs, if they're not, seeing a big inflow of, prosperity, well, then you've got a problem with your economy, particularly one as reliant on that consumer. So we're seeing that right now. We're watching prices coming off their high, and I'll show you more examples. One of the world's major wheat buyers to trim imports as prices rise. This is the demand destruction that I've talked about. So keep a close eye, stay tuned to the channel, hit that thumbs up, and you'll be more likely to see these videos, and I will document this all for you. That is my mission with this channel, to document each part of this cycle. Home showings across the United States fall 24%. Mortgage rates remain elevated. I mean, that's significant any way you look at it. Absolutely. Now, that's one indicator, showings. But what we can see is that the market is very different than where it was a year ago. There is no question about that. And even the hottest markets in the world have seen some issues. So we are watching now the ceiling, how much people can afford. Yeah, at first, for a lot of people, they were getting raises, they're quitting their jobs, they're moving around, they're getting higher pay, but there's always a ceiling. And of course, as I mentioned initially, the consumer sentiment, that what the consumer believes becomes that self-fulfilling prophecy. Now, I'm switching gears here, but I wanted to show you this. Russia defaults on foreign debt for the first time since 1918. The grace period on 2 Eurobond coupons expired on Sunday. Russian finance minister called the default label a farce. And this is something that, I've touched on it lightly over the last little while. I don't want to just go on and on about this. But what we see right now is a situation in which Russia's saying, look, you cut us off the system. We will pay, but you cut us off the system. So it's this back and forth, it's this cat and mouse, and we watch it over time in the way that it has gone on. It's important to see when countries default, because in this next cycle, or as we move through into the next cycle, you got to know that we are going to watch countries go bankrupt. We are going to watch companies go bankrupt. And I believe that there will be some very strong companies that will outlast so many countries, even the ones that they're in. Okay? Look at this. This is related to oil, and that's how I'm connecting it here. The reason you haven't seen price relief from that at the pumps is that oil refineries are still shuttered from the recession or have not yet recovered to full capacity. There's always been a lag time between the price changes at the wellhead and the pumps. The current lag time is longer than usual because some of the world's refining capacity was shut down. Okay, they're telling us that we've got these supply chain issues, logistics, everything's still an issue, and that's why inflation is picking up. Nobody wants to pay attention to the central bank cycle, which is the underlying fundamental problem here, but certainly there are other issues going on. The point is that when people go to the pump, they feel it. And that's what's real key. Doesn't matter about, inflation expectations, what the unemployment rate is. What matters is the consumer. You see? Because that divergence I talked about a few moments ago, what does that tell us? What is so ominous about that warning? All right. One aspect of the economy is undisputed. A wave of mergers in recent decades has killed or shrunk competition among airlines, banks, meatpacking companies, and other major industries. That consolidation has given the surviving companies a leverage to demand price cuts from suppliers, to hold down workers' pay, and pass on higher costs to customers who don't have much of a choice to pay up. Your gasoline, you can go to Costco, you can go to, different places. And by the way, the lineups are probably down the street. You can go to different places to get stuff. But with consolidations, the way that these happen during these parts of the cycle during the crises. This allows some companies to benefit much more than others. So watch out. See the effect this has on the consumer. This was Michael Burry. Really good. Transitory? No. Peak? No. To the moon? If you mean a cold, dark place. So, he's warning, he's giving those ominous signals as well. And he has a few things in his portfolio. Okay, this article is just mentioning a few. If you want to check it out, link in the description under the sources. I'll scroll through so you can pause it if you desire. He's got some short positions, which one of those being on Apple. And there's some others in here as well. He added shares to Warner Brothers as an example. But with anybody like this, and part of the reason I'm showing you, Michael Burry seeing signs in the market, but these are trades. What somebody talks about today may not be valid tomorrow. So be very careful in thinking that, okay, this is I noticed Michael Burry bought Warner Brothers. Michael Burry bought Warner Brothers, and so I need to get it too. Don't copy somebody else. I've talked about Warren Buffett before. A lot of people, they just simply go in there. I've seen people look at what is in one of those ARK ETFs and they believe it's good. Well, Kathy Wood is investing in it's disruptive and she's convinced me. That's not a good thing to do, guys. Okay. So, don't take what I've said here as rambling. I'm trying to give you the whole situation, the perspective from a whole different angle. And that's it. Ultimately, I appreciate you for being here. What we are seeing now is going to be a crisis for many. Now, there's some that are going to do better than ever before. Just like from 2020 to 2021 was terrible for a lot of people. It was fantastic for some. And so for a lot of people, one of those things that you can do is take care of your financial education. If you've got family members that need some financial education, we got to help them. If you don't think Money GPS is the right place, find them something. Give them a book. Give them, some website that they can learn a few things. Do it, try to sneak in some info on them, whatever it takes. Because financial education is going to change people's mind. Once we start to realize the way that this system works, it would really help out. And hey, there's other things you could do too. I talk about it all the time. Grow a garden, have some storable food, have all your situations in check. Okay. All right. That's it. Appreciate you being here. Hit that thumbs up if you support the channel. I'll see you on the next one. Take care.